Over the decades, innovation has changed our world in powerful ways. The creators and builders have pushed the envelope. They've discovered new ways of doing things we never thought were possible. They knew that innovation was not an option, that the riskiest thing we can do is take no risks. And that's true of serving investors too. Not everyone embraces innovation, but the firms who do know something that the rest don't. That the value of an idea lies in the using of it. Because it takes creativity to think up new things, but it takes innovators to do new things. And the firms building better client experiences are full of the innovators who push the fearless investing movement forward. Because the world needs dreamers, and the world needs doers. But above all, the world needs dreamers who do. So on behalf of millions of investors, thank you. Thank you for always striving to be better. Thank you for embracing the future. Thank you for leading the way. You can count on us to keep pushing the envelope for you so that you can empower the world to invest fearlessly.
Ladies and gentlemen, please welcome the CEO of Riskalyze, Aaron Klein.
Thank you so much. I've got to tell you, today is my favorite day of the year because every year we dedicate this day to you, the dreamers who do. We have so much to share about the direction of our industry and the innovation that we've been working on for you. Now, I will admit, I am an optimist at heart. Everybody who knows me is like, that's the understatement of the century. But, you know, there's some tough things happening in the world, but every once in a while, I just think it's really important that we zoom out and we look at the bigger picture. As a world, we have accomplished more positive change for humanity in our most recent decades than likely the entire span of human history. Let that sink in. A mere 200 years ago, 99% of people didn't live in a democracy. That's down to 44%. 94% of people were living in extreme poverty. Today, it's 10%. 83% of people had zero education and 88% couldn't read. That number is down to about 15% in our world on both counts. Only 57% of new humans survived their first 5 years of life. And today, that number is 96%. In every way that you might measure our quality of life, poor people in our world today, in many ways, live better than the kings and queens of 200 years ago. It's remarkable. Innovation funded by capitalism has created the most prosperous 7 billion people the world has ever known. And yes, this has nothing to do with politics. It's just a statement of history and fact. Capitalism did that. Capitalism funded it. Capitalism enabled it. It's an imperfect system, but it's far superior to any other economic system that has ever been tried. And see, that brings us right here in this room with over 1,000 of the best guardians of capitalism I've ever had the privilege to know. Because yes, that's what you do. You help ensure that the creators and the builders and the innovators can keep on doing what they do to make life just a little bit better every day for all of us. And that's why we're so inspired to work on your behalf, building industry-leading technology to help the guardians of capitalism enable the creation of a better world, because you are the bridge that empowers those creators and builders and innovators to truly be fearless investors, even in the face of one of the worst market environments in a generation. Now let's talk about that market for a moment. Since Riskalyze was founded, we've had 47 quarters of market activity, and 35 of them have been positive or pretty much sideways. There was a reason when we built our risk methodology that we stretched all the way back to 2008, and we built a data-driven model that always included a bear market. Now, we've gone through phases where some folks thought Riskalyze was a little bit too bearish. Come on, they said, look at what the markets are doing. Why is the risk number so high for this strategy that has only ever gone up? Now we're in a phase where a few folks are saying the opposite. Oh man, I know that this is a 5% probability event that is off the charts, but shouldn't the risk number have been higher for this strategy that is now below its 95% historical range? These two statements, separated by 6 or 7 years, illustrate what our time-tested risk methodology was designed to do and not designed to do. It was not designed to jump around as a barometer of the short term. It was not designed to make predictions and tell you what markets would or wouldn't do in the future. And it was not designed to make guesses about how asset classes would behave at the intersection of multiple geopolitical events. No, Riskalyze was designed to empower fearless investing. And that requires stability. That requires a sober-minded, data-driven, objective view of the 95% of the risk that we can quantify. And it requires powerful stress tests that illustrate what 5% probability events can look like. We have always believed that if we could equip you to help your clients understand how to react to volatility appropriately, we could transform that fearful investor who makes bad decisions into a fearless investor who makes great decisions. And great decisions, they're the fuel. They're the fuel that amazing financial advisors use to navigate their clients through markets like these and ultimately deliver amazing long-term financial outcomes. Now, when I think about that kind of transformation in investor psychology, it takes me all the way back to 2010, before Riskalyze was born. We had to raise capital, and I remember struggling to put together our first ever pitch deck for investors. We had a clear vision, but I was trying to succinctly illustrate the idea that humans have a tendency to sabotage their investing and do exactly the wrong thing at the wrong time. And I was a big fan at the time of this columnist called the New York Times napkin sketch guy. And I came across this sketch of his, and it perfectly illustrated for my potential investors exactly the problem we were trying to solve. Now, it turns out the New York Times napkin sketch guy has a name. He is the one and only Carl Richards, and he is here today. Please welcome Carl to the stage. Thanks for being here.
Yeah, thank you, Aaron. Super good to be here at the Fearless Investing Summit, especially in the town that I consider myself the self-appointed mayor of. Right?
Very good.
The mayor of Park City, which is just up the hill. Super great to be here.
Awesome. You know, I am absolutely, they say a picture is worth 1,000 words, right?
Yeah.
It turns out that's only true if you have talent like yours. But I'm just so blown away by the sheer volume of complicated ideas that you've helped to make simple with your napkin sketches. Like, how did you get this started?
Yeah, well, thank you, first of all. I've been actually in the industry, speaking broadly, the financial services industry for over 20 years. First as a financial advisor at a big brokerage firm that will go unnamed, but has a bull as its symbol, is owned by a bank. And then I left, started my own RIA firm, and then started this, what we called the Sketch Guy column at the New York Times. And all of those platforms have given me a chance to speak and write and interact with audiences really all over the world. And the one thing that I've been super curious about, super interested in, a little bit shocked, frankly, to find out, was if you ask investors, the humans out there, the people we love, to describe their relationship with money with one word, and this is all over the world, Aaron, the one word they use is anxiety. And which is wild when you think about all the good things we've done as a little subset. Like, I think of you as the secret society of real financial advisors, right? This little subset, all the books, all the podcasts, all the work we've been doing, none of that has changed, right? People still feel anxious with money. And that was one of the goals of the column, was to help people connect their feelings, this sounded crazy 15 years ago, their feelings with their relationship with money, their behavior, the relationship of behavior and emotion when it comes to money. And so that led to weekly column, over 800 sketches over the last 10 years to try to help people understand that relationship between feelings, emotion, behavior, and money.
That's amazing. 800. That's a lot of concepts advisors might need to illustrate with their clients.
Yeah, for sure. In fact, we were worried early on if we would run out of ideas when I said weekly. And I just told my editor, if I ever run out of ideas, I'll just use my own life, right? Like I've got crazy things going on all the time.
There you go.
But one of the things you mentioned earlier was how easy it is for us to sabotage, and how easy it is for investors to sabotage their own investment results.
Yep.
Right? We make this repeated problem where we buy high and we sell low just to rush back in when things are high again, right? Because it feels safe. It's what everybody else is doing. Now the problem is that humans have this sort of one-track mind when it comes to fear and safety. When we're scared, we have to find something to do, right? We don't want to sit on our hands. It's easy to watch, it's not easy actually, to watch the news, the Financial Pornography Network on in your dentist's office, right? You're doom scrolling through Twitter, and you have this moment like, oh no, I've got to do something. The problem with that is the market is always doing something. Whether it's scary or euphoric, it's always doing something. So there's always this sense that I should be doing something. Yeah. But we've got to train you, like you're my brothers and sisters, you're the only people who can train the people out there, the people we love, to start thinking long term. Not days, not weeks, not even years. Right? If we look at the market over the past few decades, we start to realize just how unimportant each day, week, and month has been. And it's your job, right? And to be honest, you're the only ones that can do it. It's your job to help get the people we love, in other words, your clients, to think about the long game and not the short one.
Wow, that's so powerful. It's all about what you look at and what you focus on. Don't you think it would be amazing if you could have this hung on your wall, and you could point to it and help your clients understand this concept? I'm thrilled to share with you that Carl is here to help you do just that. First, as our gift to you, we have 750 copies of the Fear and Greed sketch out in the marketplace, right out there after this keynote. And if you're joining us via live stream or you don't get one of the free copies here on site, you can go to riskalyze.com/sketch and download a high-quality image suitable for printing and framing. But what's even more cool is that Carl is on site for the rest of the day, and he has beautiful, full-size canvases of many of his most powerful sketches. They're just gorgeous. Imagine if you had Fear and Greed on your wall right behind your Zoom camera like I do. You can see these canvases out in the marketplace, and by the way, you can't miss it. They are next to the amazing vintage 1990 Land Rover Defender that was originally owned by the British Embassy in New York. It's so cool. Hey, thanks for being here, Carl. We love having you as a part of the Fearless Investing movement, and I'm just so personally grateful for your impact on our profession.
Amazing, Aaron. Thank you.
Thank you. Now, it's been a long time since we were doing that original pitch deck. And fast forward to today, and we have the immense privilege of serving tens of thousands of financial advisors across the country. And if you had asked me way back in 2011 how this decade would unfold, I really couldn't have foreseen it. We had a vision, we built an amazing team, we got the chance to serve amazing customers like you. In a small way, it's the same story as each of you who have built wealth management firms. It's such a privilege to get to support fellow entrepreneurs and builders like you on this journey. And I love this quote because it speaks to me about what the leaders of wealth management firms do every day. Laurie Schultz, who was the first female CEO of a billion-dollar valuation software company in Canada, said, "Leaders create a future that wouldn't otherwise have happened by making promises they don't know how to keep and then finding a way to live up to their word." Now, I'm clearly not talking about promises of market performance here, but I'm talking about the promise that you will help your client chart a course through complexity to a place of simplicity. You said, "I'll help you get there," and you found a way to live up to your word. I not only love that quote from Laurie, I love having the opportunity to work with her on a regular basis. Late last year, she was named chair of our board of directors, and we're so grateful she joined this journey with us. Please welcome Laurie Schultz.
Well, thank you, Aaron, and hello, everyone. I'm just so thrilled to be here and to have joined the Riskalyze board and to be serving as its chair. And I'll say there's just something really magical about the people in this room and this industry. In truth, I've just never seen a customer base that is so passionate and in love with a product before. And as I get to walk the halls and chat with many of you, it's incredibly clear that Riskalyze has delivered incredible and sustaining value to your businesses. And we're really proud of that. And we pledged to never give up driving that value for you. And here's one thing I think is so cool too. We've been able to prove that this technology works. After all, we've been going through a crazy period of volatility, both the 2020 pandemic crash and now this 2022 inflation crash. And here's something fascinating I just learned from our data. During this period of volatility, we've had thousands of your clients answering the questions, how do you feel about the markets? They click positive or negative. It's probably not a huge surprise that the volume of people with positive market sentiment has plunged 126% this year so far. But here's an amazing statistic. For those same clients answering the risk questionnaire, their average risk tolerance has only dropped by 2% during that same time. That's not even adjusted for those folks getting closer to retirement. And this is why. 85% of wealth management firms with a risk solution choose Riskalyze and our rigorous methodology. It's why the average advisor is 4.6x more satisfied with Riskalyze than the other leading wealth management tools on the market. And here's one thing to consider. Riskalyze is the only wealth tech platform to drive results for all three players at the table: wealth management firms, financial advisors, and the end investors themselves. Many products impact two of them, but I've yet to see another solution that can leave all three better off than they were before. We believe that when investors feel empowered to invest fearlessly, advisors are more successful. And when advisors are more successful, their firms are accelerating their growth and driving great results. That's the kind of innovative software we're going to continue building for you. And speaking of innovation, I know Aaron and team have some incredible announcements in store for you all. So back to you, Aaron. Thanks very much.
Thank you, Laurie. You know, our first decade as a company has definitely been an amazing journey. We've invested more than $250 million building this company from the ground up, and it still feels like day one. And as I think about the next decade in front of us, it strikes me that in many ways, we will continue to be the same company that you know and love, and in many ways, we will be a very different kind of company. What will stay the same? A lot that defines us today. Our mission of empowering the world to invest fearlessly, our undying confidence that financial advisors are the key to accomplishing that mission and helping investors achieve success, our steadfast conviction around objective, data-driven, and rigorous methodology for analytics and risk, our belief that harnessing behavioral psychology is what really empowers investors to make great decisions, and our ethos around designing incredible software that you love to use and allows you to powerfully tell your story. But as we step into the second decade, we think there are some things about our company that are going to change as well. Number one, the press has written for years asking, when is Riskalyze going to become a TAMP or an asset platform of some sort? And almost every big company in our space has achieved its revenue scale by becoming an asset platform, asking you to let them manage your assets and taking a piece of your basis points. We feel like that's a crowded market with a lot of great players. The vast majority of them are our partners. And as we've thought about our strengths and our skills, we've realized that in our heart of hearts, we're a pure play technology company. We can't figure out what we would uniquely bring to that part of the market. So we've made the strategic decision that as far out as we can see into the future, we are going to stay a pure play technology company. We're not going to be an asset platform. We're not going to ask you to let us help manage your client assets, and we're not going to ask you for a piece of your basis points. Number two, we believe that we've effectively invented a new space that provides us with plenty of room to continue innovating and growing for our next decade. Now, when we first came on the scene, everyone told me, Aaron, there are 3 pillars of wealth management technology. There's the financial planning tool, there's the CRM, and there's the asset platform. There's no room for a 4th pillar. And we started building from the lens of risk, and we started with a risk questionnaire, and then we built portfolio analytics, and then proposals, and stress tests, and investment policy statements, retirement maps to evaluate risk capacity, check-ins to keep your finger on the pulse of client psychology. We built many of these features for advisors, and then entire wealth management firms started rolling them out to create a consistent client engagement experience, to deliver a customized and differentiated technology stack to their advisors, to get the insights and the analytics to drive alignment and growth across the entire firm. Today, we've grown so far beyond that first risk questionnaire product, I'm convinced we have invented a 4th pillar in wealth tech. It's a pillar that feeds data to and from your financial planning tools and deeply integrates into your CRM on one side and your asset platform on the other. And we call it the growth platform. It defines what we've built over our last decade, the new things that we're excited to announce today, and what we plan to deliver to the marketplace over the next decade. Your growth platform defines 4 things. First, it gets your firm's growth flywheel spinning, defining how you engage with prospects, turn them into clients, and drive their satisfaction and retention. Second, it drives a consistent client experience across your firm, helping you create one cohesive firm with a unifying value proposition for every investor you serve. Third, it gives you the insights to accelerate your progress, to understand the behaviors, actions, and drivers that your high-growth advisors are leveraging, and use those insights to drive change across the firm. And fourth, it keeps the rocket ship you've built safely on course, equipping your firm with the compliance analytics to spot and solve problems proactively and work collaboratively across your firm in keeping clients aligned and on track. We've delivered a lot of our vision for the growth platform in our first decade, and we believe that our pure play technology company DNA plays a huge role in how quickly we can deliver real innovation into the hands of the advisors and wealth management firms we love to serve. We're really excited about this vision. Last, but certainly not least, I'm going to let you in on a little secret. There's one last thing that is going to change about our company in the future. But I can only share this if we can keep it between us and it doesn't leave the room. Deal? Okay? Given that we've built so far beyond that risk questionnaire we started with, we've realized that while we will always be the company on a mission to empower the world to invest fearlessly, the name Riskalyze really just embodies part of our product portfolio. As we step into this next decade and build out the next chapter of our growth platform vision for you, we're going to do that with a new company name. You'll still use Riskalyze as the product you know and love, but early next year, our company name will start to tell a broader story for the future. We can't wait to share that with you when the time is right. And yes, it means we're going to have to print a lot more t-shirts and baseball caps. All good. All right, now remember, you promised you got to keep that last part a secret, okay? Hey, we aren't live streaming this to like hundreds of people, are we? Oh well. Okay, well, let's jump into the product. I want to take you on a tour of our growth platform from end to end so you can see how it's evolved over the years and experience all the new features and capabilities that we've been working on for you. And I'd like to start with the portfolio screen, the most used part of Riskalyze. You all use it more than 1 million times every single quarter. This year, we introduced the all-new Portfolios experience, which has been an incredible enhancement to the way advisors navigate and interact with complex portfolios and accounts. And it's proven to drive more efficiency in the day-to-day workflow for advisors across the platform. There are a few key elements that I want to point out. The portfolio's risk number and 95% historical range are front and center, making it easy to set the right expectations with clients and prospects. And it's quicker than ever to flip on a set of stress tests to help make your point. One of my favorite things about this portfolio screen is how the analytics are adaptive. Anytime you drill into an account, you'll see updated analytics for the risk number, 95% historical range, GPA, and more, all updated in real time. Now, as great as this is, we knew we needed to make it easier to organize and categorize your accounts in more useful ways. Today we're excited to launch account groups. Let's say you want to organize the accounts within multi-client households. Well, we can easily do that. Maybe you want to organize every account based on particular financial goals, like saving for college, buying an RV, or planning for retirement. Or perhaps you want to separate them by time horizon, like 0 to 3 years, 3 to 10 years, and 10 plus years. This is also a feature that some of you wanted to better align with our integration partners. For example, the Orion platform has the concept of portfolio groups, and we're currently updating that integration so that your Orion portfolio groups can automatically become account groups for you in Riskalyze. No matter how you want to slice up your client accounts, we're giving you the power to do it in a way that's most effective for your workflow. You can start using account groups today, and it's a free upgrade available for all Riskalyze users. Okay, let's talk next about building proposals for clients and prospects. There's a reason why tens of thousands of advisors love using Riskalyze to build proposals, because it really allows you to effectively tell that story and explain the unique solution that you've built for that investor, empowering them to buy into the game plan and stay invested fearlessly for the long run. So let's say we're working on a proposal for our prospect, Barbara, and we know that we need to incorporate some fixed income to get the risk number of her proposal where it needs to be, but I'm not quite sure what I want to include. Let's hop over to Discovery. Now, as I showed you last year, Discovery is the fastest way to screen through stocks, mutual funds, and ETFs, but we've been hard at work adding more filters and securities into Discovery. It's now also the fastest and easiest way to sift through SMAs and fixed income funds as well. So I've already got some government bonds in Barbara's proposal, but I want to add some corporate exposure. So I'll just search. I'm looking for between a risk number 1 and 30, and I can go ahead and add corporate bonds. And that's going to get me down to 343 funds. Now let's limit this by maturity. So I'm going to say 0 to 2 years, okay? And finally, I've still got like 37 choices here. So I'm going to put in a Riskalyze GPA of 3.8 or higher. And there you go. I've got 11 great options, and I can compare them side by side or drill down to learn more about each fund. I'm going to go ahead and favorite this fund right here and then head back to my proposal. And now it's really easy for me to add my favorited funds to Barbara's proposal or any other proposals I might create in the future. How cool is that? The last thing I'm going to do here is I'm going to take a deep dive with stats. The beauty of our research tools is that while they're deep and technical, we built them with the same ease of use and visual clarity as the rest of our platform. And our goal was twofold: to give you powerful tools to build better portfolios and give you a next level way to take your more technical clients under the hood. So I can walk through model performance and compare it to benchmarks or model portfolios. I can visualize diversification and really understand what's working in concert and what's giving us protection. I can dig into asset classes, sectors, and regional exposure. You know, we serve firms who specialize in working with NASA employees or neurosurgeons, and these clients really love to spend a little bit of time in the complexity before you guide them to a place of simplicity. Our deep research and analysis tools in Riskalyze Elite are a powerful and affordable way to do that. Scaling wealth management firms are at the forefront of leveraging all of this to create new opportunities for their advisors. And a really great example of that trend is Kingsview Partners. We're so proud to work with them and serve their incredible firm. And I'd love to invite Sean McGillivray, the Chief Executive Officer of Kingsview, to this stage. Thanks so much.
Thank you, Aaron. This definitely feels like a Risk 99 situation here. I'm very excited to share with you and chat about our partnership with Riskalyze and how we've implemented it into our firm. Kingsview is on the forefront of a big trend in the RA space, and that's of consolidation. And it's not that bad consolidation where we have big fish eating the small fish. We're talking about the unstoppable market progress made by fiduciary advisors. Clients, regulators, and the industry have finally recognized the need for a single standard of care. And they figured out they need a consolidated service that aligns the interests of the end client. Kingsview owes a large part of our success to this monumental attitude shift. We see this as an absolute positive for our industry and is why we see a purely fiduciary future. The days of the broker and the agent have passed. Today's investors need an ally equipped with the tools to implement solutions for complex problems. Our complete platform for the independent financial advisor embodies our dual mandate, which one, prioritizes our clients' interests and empowers the women and men that serve those clients. It was clear that we needed to deliver a platform to the advisors to drive growth. A key way to do that is to create alignment between the client and their portfolios, helping clients envision the path forward and understand the risk and return trade-off is vital to driving client retention, satisfaction, referrals, and growth. Kingsview was an early adopter of Orion as our portfolio management platform, and we needed a great integration and a rock-solid risk methodology we could trust. What I love about Riskalyze is that it's delivered a consistent client experience, strong methodology, and a deep integration with Orion, making our tech stack feel like a connected experience. The Kingsview model portfolios that we've maintained in Orion flow right into Riskalyze, and the risk numbers flow right back into Orion in our performance reports. Even better, we've heard a clear commitment from both companies to keep investing and deepening in those integrations. We also work directly with Riskalyze using their APIs to feed in specialized data about our investment strategies we use with our clients. They created a unique experience that Kingsview clients really can't see anywhere else. There's a lot of important elements to building and scaling an RIA. But a partner with deep technical expertise, like Riskalyze, helps us drive growth. That's the critical ingredient. We're so excited to provide these capabilities to our advisors. Ultimately, this has led us to be able to build the distinct value recruiting opportunity that we have. Our differentiated tech stack, industry-leading integrations, and competitive economics make us even more attractive to growth-minded, independent advisors who want to achieve better scale and growth in their firms. Aaron, thanks how your firm is supporting us. We really look forward to this partnership.
Awesome. Not nearly as much as we are, Sean. And to get to work with one of the fastest scaling RIAs in America and help you create that differentiated experience for your advisors is an incredible privilege we're grateful for. Thank you.
Thank you.
Let's give it up for Sean. Okay, so we've built out a compelling proposal, and we've completed our due diligence process with discovery and stats. And we know what comes next. Meeting with the prospective client. Time to win the business and bring a new client aboard. And if you've been using Riskalyze for a while, you know the formula. First, there's a really solid chance that the prospect has more risk in their current portfolio than they want or need. It's about 88% of the time. And when you can show them that they're off track, that is a powerful recipe for growth. We call it the ACAT form moment, right? But that means that about 12% of the time, the prospect's current risk might actually line up with where they want to be. So what do we do then? Well, over the last few years, advisors have been using Riskalyze GPA to answer that question, right? GPA is an easy to understand metric that illustrates how much return a portfolio is typically delivering in exchange for its risk. It's a relative metric, and we like to say you can be proud of any portfolio with a GPA of 3.5 or higher. We're proud of our kids when they have a GPA of 3.5 or higher, right? But look, the truth is, unlike our kids' grades, there can be good reasons to put low GPA funds into a portfolio, right? Particularly if you think something about the future in an asset class or a sector or a geo is going to be different than it was in the past. So advisors will leverage Riskalyze GPA to say, hey, your current portfolio may have a risk number close to yours, but you are in a 2.9 GPA portfolio and I've built you a 3.6. That's going to give us a better chance for upside and maximize the return you get in exchange for the risk you need to take. Pretty compelling pitch, okay? But let's say that the prospect's risk is in line and their GPA isn't too shabby either. Do we give up? Is this a client that you can only win with your good looks and personality? Wouldn't it be great if we had a third lever to drive a great comparison and create another advantage for you? Well, underneath the hood of many ETFs, mutual funds, SMAs, and other investment solutions lies a massive factor that can create a very meaningful difference in an investor's actual return. particularly when you consider the impact of compounding. Leveraging this factor as a competitive advantage creates a massive opportunity for you to stand out and deliver superior returns compared to your competition. I could try to explain this to you, but I thought I would bring out one of our industry's leading experts when it comes to using personalized portfolio insights to build winning proposals. Please welcome Jonathan Shapiro.
Thank you. Thanks, Aaron. It's a great privilege to be at the Fearless Investment Summit with all of you. I've had the pleasure to work with several of the industry's best firms to drive innovation in creating competitive advantage for advisors by using personalized portfolio insights to reinforce the value they bring to clients. I really love how Riskalyze has built a risk-driven proposal tool that allows the client to feel deeply empowered by selecting a path forward that suits them best. From my time leading investment analytics at one of the largest global financial institutions, I've found that providing targeted insights in a hyper-personalized way help drive engagement, conversions, and retention. Showing a side-by-side comparison of the risk number and the Riskalyze GPA all contribute to what makes a highly personalized proposal a success. But there's one additional factor that is a powerful tool to drive client engagement and wins. And I've had the privilege to partner with Riskalyze over the past few months to develop tax drag. Tax drag is defined as a reduction in a portfolio's annualized return due to taxes. Very simply, it's the tax liability triggered by distributions and capital gains in a non-qualified account. Pretty much every investment manager talks about tax efficiency, but very few provide understandable metrics to demonstrate it. And just like high expense ratios drag down returns, inefficient tax management has a massive impact on your clients and the assets they have invested with you. And tax drag illustrates this beautifully. Take a look at this existing portfolio. It's losing 1.87% of its return to taxes. And it's so powerful to dollarize it. On a $3 million portfolio, that's $57,000 of real portfolio value every year vanishing with taxes. But if we pull up the proposal you've built for your client, it's a very different story. Just 0.37% tax drag, and that saves you $46,000 a year that keeps compounding for the client. And by the way, increases your AUM. This can be a real game changer to drive client engagement and conversions. And in many cases, the cost to transition a taxable portfolio can be offset by the reduction in tax drag. We didn't just put tax drag on the portfolio screen. We also designed this brand new standalone portfolio snapshot report, and it will be in other reports too. Yeah, you can see a side-by-side comparison of the advisory fee, expense ratio, and tax drag inherent in these portfolios. And check this out. Even if I have a higher advisory fee, I can show this prospect that it gets paid for by reducing tax drag. When we rolled out a combination of risk, costs, and taxes at my previous institution, we saw an immediate 4x uptick in wins as measured by flows. There's just something magical that happens when you can save clients money on taxes. It's one of the most powerful things you can do as a financial advisor. And I want to see every advisor using Riskalyze to be able to achieve those same results. And that's why I'm so excited to have partnered with the Riskalyze team to deliver these capabilities as a key new part of the product. Back to you, Aaron.
Awesome. Thanks, Jonathan. We are thrilled to make tax drag a new metric that you can use across your firm to win even more prospective clients. And this is going to be a free upgrade as well for all of our customers later this year. We're going to start by rolling it out on the portfolio screen and when you pull up stats on a portfolio or an individual security. And then we'll launch the new portfolio snapshot report. And we're going to start the process of integrating the snapshot into our portfolio, proposal, and IPS reports over the following few months. So let's zoom out and let's see what we've accomplished so far. From the client profile, we can see Barbara's current portfolio, We can see the proposal we built leveraging the new tax drag metric. We had already captured Barbara's personal risk number up here, and we used the risk questionnaire to do that. And finally, we can check on Barbara's risk capacity with retirement maps. Now, what I love about retirement maps is it's a 60-second way to answer the question, how much risk does Barbara need to take in order to reach her goals? And for those of you who leverage comprehensive financial planning as a big part of your practice, retirement maps can be an incredible precursor that draws the client in and helps them to see the benefit of spending all that time with you building out that financial plan. And it's so quick and easy to pop in here. Most of this data got filled in from the risk questionnaire, and I can just adjust a variable or two and quickly figure out if Barbara is on track. And our elite customers love using timeline events to make this analysis even more interesting. But what I'm really excited about is how we're making some big investments in integrations in this space as well. Because the truth is, many advisors create retirement maps for all their clients and then create comprehensive financial plans for the 20, 30, 40% of their clients who need them. Others skip retirement maps and go straight to the comprehensive financial plan for 100% of their clients. Either way, we're in the middle of building a brand new integration kit for financial planning tools, allowing us to work with our great financial planning partners like, for example, eMoney, Money Guide, and Right Capital. And our vision is that you should be able to launch the creation of a new plan right from within Riskalyze. We pass over the data to save time. And then here's the big thing. After you've created the plan, we want to make it easy for the risk number to be your translation layer back into the investment proposal. Your client wants to be a 44, but their financial plan says that they need to be a 56. And that's a rich conversation. We're looking forward to bringing this vision to fruition in 2023, and I think that our great financial planning partners are going to help us create some really unique and compelling experiences and an even more seamless workflow for you across your tools. And that's not all the investments that we're making in integrations. We were incredibly proud to win a perfect 10 recently from the Ezra Group Wealth Tech Integration Score. I guess you could say we're going for 14 of 10 next year. We're investing in these next generation integration kits across several other key parts of the technology stack. CRM is definitely one of them. Whether you're using Redtail, Salesforce, Wealthbox, or other CRMs that we connect into the new kit, we want to take the data and events happening in Riskalyze and feed them very consistently into your CRM so you have an automatic record of all your interactions with your clients in one place. And the asset platforms are another one of those integration kits. We're going to make it even easier to implement proposals that you write in Riskalyze into the asset platform that you leverage to manage your accounts. With this next generation kit, we're already focused on deepening our integrations with Orion, with Black Diamond, with InvestNet. Today, for example, you can easily propose one of those models in a Riskalyze portfolio. Imagine if you run your trade desk on one of these asset platforms. With this next generation kit, clicking implement on your Riskalyze proposal will automatically trigger the workflow to rebalance that client's account into the new model you proposed. We're working with a wide array of partners on this new integration kit, including a number of the TAMP platforms who provide outsourced execution to advisors and who are really excited about making it a lot easier and more seamless for you to implement your Riskalyze proposals into your client accounts with just a click. Now, there's a lot of hard work with these. We call them last mile integrations for a reason. But our new next generation integration kits for our partners in financial planning, CRM, and asset platforms are a key part of the equation to create even deeper workflow integrations that can massively increase your efficiency and drive your growth as a firm. Now, let's fast forward 3 months into the future. I brought Barbara aboard into my firm, and then this market hit. Lots of things are going on. And I have an interesting problem because I have 75 clients and they're all different. They all react differently to volatility. Some of them are cool as cucumbers. Some of them get a little riled up by CNBC. Some of them, it takes stress in their personal lives combined with market turbulence to really put them in a bad spot. Does this sound familiar? That's why we built this incredibly powerful feature of Riskalyze a few years ago called check-ins. A ton of firms automatically send monthly or quarterly check-ins to their clients, or you can send them out on demand as well. And I'm going to go send one to Barbara right now because I know she was in a good place when I brought her aboard a few months ago, but I want to keep my finger on the pulse of her psychology. Now, this probably looks familiar. Barbara is going to get this email on her phone. It's branded from my firm. Hey, it's time to check in. And she can answer this with just 2 taps, right? Our first question, how do you feel about the markets? She taps negative. Duh, okay? Now, second question, how are you feeling about your financial future? She taps confident. Now, this is incredibly powerful because with these 2 signals, I can really understand the client's psychology and what I'm going to do in response. Since the 2020 pandemic, we've seen a huge spike in the number of advisors using check-ins with their clients. It's amazing how effective it is to sift out which clients need your attention and which ones are doing okay. Just take a look at what a few of these advisors have been saying. Sean said, I love check-ins. I sent them out, I got over 50 responses. I heard back from clients that normally won't respond to anything I send to them. Jimmy said, check-ins is like client radar. I would pay for Riskalyze just for this one feature. Now here's something interesting. We've now captured over 1 million data points about how investors are feeling about the markets and their finances. And remember how Laurie shared with you earlier about how we've watched market sentiment drop an astounding 126% even as client risk tolerance has stayed incredibly stable? Well, look at what else we've learned. This is a combined view of all the investors tapping on these check-in questions since 2020. In 2020, okay? Notice that we've got market sentiment in purple and plan confidence in green. So this is just the data in 2020. And this orange line, that's what the S&P 500 was doing during that same time period. Just look at how tightly correlated that is with the aggregated market sentiment. It's uncanny. Now, up until we get to the pandemic crash, it's really normal for plan confidence to be a little bit lower than market sentiment, right? Because markets are up, and there are always going to be investors who are wondering, why is the market beating my portfolio in the good times? Makes a lot of sense. But that gap inverted during the pandemic crash, and then by the end of the year, it had flipped back to its normal state. But even then, there were some very interesting signs of investor nervousness. Let's add in 2021 and 2022. Notice how market sentiment plateaued even as the S&P 500 continued to rise. It's almost as if the crowd knew that there were some issues lurking underneath the surface of these markets. And that's when things really took a turn. In 2022, market sentiment actually dipped below the low point of the 2020 pandemic crash. To investor psychology, sustained inflation feels a lot worse than the pandemic crash. And here's another amazing proof point. Did you know that on average, the prospects answering these questions on your lead gen questionnaires, the lead gen questionnaire on your website or maybe in your email signature, those prospects on average are 3 times more anxious than the existing clients that you serve. What an incredible demonstration of your work. What an incredible demonstration of how Riskalyze is helping you keep your clients fearless and on track. What a powerful indicator of the value you will soon be delivering to those prospects. The power of what check-ins is already accomplishing motivated us to build an all-new experience. Check-ins is about to get a lot more accessible and even more actionable. Let me show you. I'll start by clicking on Clients and selecting Check-ins. Here you can see your entire list of clients and their most recent responses. Barbara has now popped to the top because she just completed her check-in. And you see there in the second slot, we've got Eminem. We all remember that song where it kind of says he's nervous, but on the surface he looks calm and ready. Yeah, I'm not an Eminem fan either. But maybe that's just life with Eminem as a client, okay? Now, all jokes aside, let's break down how this new view categorizes the clients who respond to check-ins. We've built 4 really clear client labels that are going to make it even easier for you to take quick action when a client checks in. First, let's pick on the easy one. We have our happy client. They responded positively to both questions, green, green. You've taught them to understand not just how their portfolio is aligned with their risk number, but how they need to focus on the big picture. You've gotten across them, it's decades, it's not weeks, right? And so they're not focused on the short-term volatility. They're green, green. Next, we have the confident client. They're nervous about the market, but they're feeling good about their plan, red, green. It's reasonable to have some negative market sentiment right now, but they're hanging tight and feeling good because you've helped them understand that they're aligned with their risk number. Probably not a lot to be concerned about here, right? Next, we have the fearful client. These are the clients that responded negatively to both questions, red, red. Not only are these clients worried about market conditions, but their psychology has gotten to them. They need a lot of reassurance that they are on the right track with their plan. These might be clients who came in with a big taxable account, and it takes time for you to get their portfolio in alignment with their risk number. Or maybe they're just a tad emotional and they just need a reminder about the level of risk that they signed up for when you built out their plan. This is the kind of person, by the way, who would definitely blow up and sell at the bottom if they were with a robo-advisor instead of you. You're going to put these clients right at the top of your call list. These are who you're going to go talk to, right? But here's a big one. The last category is the anxious client. And this is a very interesting combination because they were positive about the markets, but anxious about their own plan. Green, red. And think about it. Especially when you're in good market conditions, this is a huge blaring signal that the client might be getting a little too excited about crypto. They might be watching everybody else buying GameStop, and they're probably wondering if they have the right advisor. You have a huge opportunity when you spot anxious clients because you can jump into a conversation, level set their expectations, make adjustments if you think that they're warranted, but ultimately get them realigned with their plan. I think you can see why advisors leveraging check-ins have way higher client satisfaction and way higher client retention. One firm with 12 advisors told me that Riskalyze helped take their client retention from 81% to 97%. And if you do that math, that saved about $1.1 million of revenue for that firm every single year. Not assets, revenue. Not to mention the impact on that firm's valuation. We've completely rebuilt how you engage with check-ins here so you can see the responses across your entire client base and sort them by status so you can see which clients might need your attention first. And then it's easy to dive into any client and see their check-in history. You can change the frequency of check-ins, you can skip one, or you can send a special check-in at any time. Check-ins are the most powerful way to keep your finger on the pulse beat of client psychology, and now they're more accessible and actionable than ever before. The all-new Check-ins is available starting today as a free upgrade for all Riskalyzers on every plan. We can't wait to hear your feedback after you start using them. So we've talked about account groups. We've talked about tax track. We showed off the new portfolio snapshot report that's coming. And we've shown you the incredible new check-ins experience that is live in your account today. But I've got one last really exciting set of capabilities to show you, and it's laser focused on those of you who are working to build a growing wealth management firm, whether that's 3 advisors or 6 advisors or 10 or 20 or some of our larger firms with 1,000 plus. When you're building a scaling firm, there are so many things you need to do. Recruit and retain advisors, train them, build and deliver a consistent client experience. Take the best practices of the advisors driving your growth and help spread them to the other advisors lagging behind. And ultimately, keeping that rocket ship you've built safely on course. And that's why we built a command center for firm owners, for your ops team, your compliance and supervision folks, the head of wealth management, the CEO, the COO, the CCO. Whether I've just described 50 people in your firm, or you're still running a book of business while you wear those hats for your 3-advisor shop, you have real responsibilities to ensure that you drive firm-wide alignment in how you serve and support your clients. This new command center is at the heart of Riskalyze Ultimate, the platform for scaling wealth management firms that starts the growth flywheel spinning, delivers a consistent client experience across the firm, and drives alignment across your book of business between clients, their documented objectives, and the investment solutions you've delivered. To show us how firms can leverage the power of Command Center to protect and grow their businesses, I'd like to welcome to the stage an incredible leader in our industry, the former Chief Product Officer at Morningstar and a member of our Board of Directors, Tricia Rothschild.
Thanks, Aaron. Hi, everybody. What a great hour almost already. I've done a fair number of software demos in my day, and I just think that the announcements here today are really spectacular. It's hard for me to pick my favorite. There are hundreds of advisors in this room, and even more online, who are working tirelessly to grow their businesses. But when you reach a certain scale, you do need to set some systems in place to ensure that everything is in compliance. So not to be a drag, but it is a fact. That's where the Command Center comes in. Whether you're the Chief Compliance Officer at a firm with thousands of advisors, or compliance is one of your many, many hats at your 6-advisor RIA, Command Center Compliance has the tools you need to sift through thousands of accounts and find issues before they become problems. You can leverage the compliance analytics that are necessary to then get clients back on track. There's a saying that I really like from Warren Buffett. He says, "Only when the tide goes out do you discover who's been swimming naked." There's a lot of truth to this. Often we're so focused on growing our businesses, mastering our client onboarding process, building out the perfect portfolio, retaining our staff, we forget to have a system in place to protect the business we've built. So this is Command Center Compliance, and I'm so excited to show you these amazing tools. We start by loading every account in your book of business into Command Center. We built a brand new data architecture, which is not easy to do, by the way, and incredible search technology to run this product. It's lightning fast. Every night, after we get fresh data on all of your accounts, we recalculate the risk on every single holding in every single account using the proven risk methodology that has powered the Riskalyze platform since its beginning. We make it really easy for you to upload your investment or risk objectives for each account, and then you can define the ranges that are acceptable to you. So let's say you're good with moderate growth accounts ranging from risk 67 to risk 75. Super easy. So when Command Center brings that data together, all of a sudden you have a dynamic view into your entire book of business, and we can help you fly through thousands of accounts to find just the ones that you need to focus on right now. You can just click, isolate the accounts with risk higher than their target. You can add in accounts with risk lower than the target. You can even filter the list down to, say, 2 million and up, and focus on those accounts first. You can see just how easy it is to run any of these rows by risk number or, say, advisor name. Maybe you're prepping for a meeting with a specific advisor, and you can pull up all a list of their specific accounts. You can also download it into a spreadsheet to discuss with a colleague, or maybe you want to combine it with other sets of analysis. So there's one other thing I want to show that's really cool. Later this year, we're going to roll out householding for Command Center. I can switch from viewing the same analysis that I did at the account level at the portfolio level. It's really easy to drill down and see exactly how much each account has invested and then the risk number of each holding. I know exactly what to talk about with each advisor, and I can easily flag an account for review with that advisor. Now, you'll always be able to use Command Center to manage your entire book of business. We're also adding amazing collaboration tools to make it easier for compliance to work with advisors using Riskalyze. I know, it's a big thing, getting compliance and advisor on the same page for once. We've also just launched incredible new tools to search for concentrated positions. I can reset all the filters, and I can search for any accounts that have, say, 10% or more invested in an individual stock. Or maybe too much cash, or if the meme stocks are still going strong, I could easily figure out if any of my advisors have put their clients into GameStop. So now we know why M&M might have been getting a little nervous. So that's Command Center Compliance. It's available today. The best part is you don't have to rip out and replace any of your existing systems or workflows, which I also know is a huge barrier. No need to do that. Command Center instantly gives you, your compliance, and your ops teams better visibility into your business. And I think that's how compliance actually can drive growth. So with that, I'm going to pass it back to Aaron.
Thank you, Tricia. It's been so awesome having Tricia on our board. She brings such a wealth of knowledge from her time in the industry, and she knows scaling wealth management firms like few other industry leaders do. As you just saw, Command Center and the broader Riskalyze Ultimate platform is bringing the growth platform to life for wealth management firms, spinning up the growth flywheel, delivering a consistent client experience, and protecting the business you've built. We can't wait for all of the scaling wealth management firms in our ecosystem to have the opportunity to see how Riskalyze Ultimate can drive massive growth for their advisors and their businesses. Wow, what a day. We've talked about the all-new portfolios experience and how account groups will change the way you organize client accounts. We launched Tax Drag, the new analytic that helps you win clients alongside the risk number and Riskalyze GPA. We've seen the brand new portfolio snapshot report. We've launched the powerful all-new check-ins experience that gives you early warning signs when your clients need support. And we've seen Command Center delivering powerful compliance analytics across your book of business. And together, all these capabilities form the industry's leading growth platform, a combination of powerful tools for your advisors, your ops staff, and your compliance team that is unmatched in its ability to drive amazing growth for your firm. As I said, the new check-ins experience is available today for all customers. And if you'd like to take a closer look at how Riskalyze Ultimate can power the next wave of growth for your firm, we'd love to sit down and show you its full capabilities. Track down a member of our team at Riskalyze Central or ask for a demo at riskalyze.com/ultimate. On behalf of the entire team, thank you so much for all that you do to empower the world to invest fearlessly, and have a great rest of your time here at the Fearless Investing Summit. Thanks, everybody.
Feel like I'm in all my best clothes. So good that I don't care that Chick-fil-A's closed. Like a slow motion cruise on the